giving us a sense of the business. That's Motherson Sumi. Stocks holding out positively today. On that note, we do have to move to our next corporate conversation. Market, by the way, is doing well. It's a repeat of yesterday. The mid-cap index is flying away. Now the Nifty is also up about 45 points. Bank Nifty, the only negative index. So that's the shape of the market, gradually sort of improving and moving along. But as I said, we have another corporate conversation that we have to get into. JM Financial has written an interesting note on the plumbing and drainage pipe sector. JM Financial says that demand has picked up and that the months of June and July have been very encouraging. Let's find out if that is indeed the case. We have with us Neeraj Kedia, the Deputy CFO at Finolex Industries. Mr. Kedia, thanks for joining in. So you tell us, I mean, that's what one brokerage is sort of picking up from its own resources. But second quarter demand, is it is it substantially higher than Q1, and where does it stand compared to the pre-COVID level?
Sure. So see, generally Q2 is actually a slower quarter as compared to Q1 in agri sector as well as plumbing sanitation. In agri primarily because monsoons kick in, so there is less laying of pipes in the fields, and again because it is seasonal, because of rains and all things, the construction activity usually goes down a bit in Q2. But this year, I would tend to agree with what your analyst report says. The demand has been pretty robust. What has happened is post the lifting of the curbs, COVID curbs, there is strong demand on plumbing and sanitation in the urban side. That is because retailers are able to open their shops, keep their shops open, and there was a lot of pent-up demand, I would say, which was holding back some of the uplifts in the past. Again, because of the way last year went by, the way the COVID-2 curbs came this year. So after the uplifting of the curbs, after people are starting to open their stores and all, we are seeing pretty robust demand in the plumbing and sanitation work. So yes.
Okay, Mr. Kedia, I got that. What does this mean in terms of growth for you? I mean, of course, there was a low base last year, but still you saw 71% growth in your revenues and almost sitting at a base of 1,000 crores revenues. What could the growth be for the rest of the year and, I mean, for FY22 as a whole?
So if you see, in terms of, you're right, we had a lower base last year. But, and if you see, in terms of volumes, in Q1, we were not 70% higher. In fact, our volumes were higher by 5.5%, which is not bad at all because even this year there were COVID restrictions. But in terms of revenue, when you say top line, it was up 70%. That is actually primarily driven by the rise in the resin prices across the globe and also in India. If you see from the resin prices hit actually historic highs of more than $1,600 last year. So that is what is reflected in the higher revenue. And yes, quantities have been stable, have been robust. It is slightly higher than the last year. And we'll see how this, so far this quarter has been going pretty well for us. Obviously, I can't give you any specific numbers on where we see it right now, but let's see when the quarter ends. Hopefully we'll have, good performance.
Okay, so one more point on this. What about spreads, the EDC to PVC? Our colleagues sort of inform us, EDC is basically the raw material used to make PVC. So those spreads were looking very robust in the first quarter. Can you tell us the levels now? I believe, they were around, $834 per MT. Where do they stand now?
So they have gone up more than $900 right now. So see, if you see from May, June, July, 3 months, and I'll say in India terms, the resin prices kind of went down by around 20 rupees a kilo. But in the last 1.5 months, they're in fact higher by almost 25 rupees. So that reflects the movement in PVC prices globally. And that is why, these spreads have kind of improved as we speak right now.
Okay. I want to understand a little bit about whether government projects have picked up. Anything in the pipeline? And if yes, can you elaborate on, what kind of margins you generally enjoy? What is the opportunity here?
So typically for us, we don't deal directly with any government project. It's our dealers, distributors who obviously on their own capacity, they bid for these projects. So in our case, margins, it typically does not really matter because for us, it's any other sale. And I would not be able to comment on what margin our dealers make on these projects. But so far as the initiative goes and the demand goes, yes, we are seeing some traction. Because see, as time goes, these are long drawn projects. It takes time for the agencies to bring water near the households, and then at the last mile is when you need really the pipes and fittings to provide water into the households of people. So it's not it takes time for these initiatives to roll out eventually to reach the last mile. But we are seeing some good traction there, and hopefully we'll see more business coming out of this sector as well.
Okay. Now, Mr. Kedia, you've told us that demand is good. Can you, quantify that for us? I think your volume guidance was what, 10 to 15%. Can you improve that? And I go back to that main question. Right now, in terms of volumes, are you already doing as well as what you were doing before COVID? Or are you already higher than that in terms of, let's say if we talk about FY20 versus where we are today in FY22?
So, see, last year there was a contraction in the business overall. This year, our target, as we had said earlier also in our investor call, its first target is to reach FY20 levels. And as we speak right now, we are pretty confident. The way business has happened in the first quarter and the last 2 months, and this month also, we are pretty confident of reaching FY20 levels again this year.
Okay, got that. Well, Mr. Kedia, we'll leave it on that note. Thank you for joining. It's business looking good. Demand is good. Spreads are at $900 per ton. So that's good going for pipe companies, including, of course, Finolex. With that, let's quickly shift the attention back to the market. And Anuj, so again, it's a mid-cap party. I mean, it seems to be very similar to what we saw yesterday.
Yes, it's getting a bit boring, right? But at the end of the day, if you make money, good for you. Just look at the two stocks, by the way. ONGC, I mean, it's broken that 52-week high. That's something that we had, of course, spoken about in the morning. 5% higher on ONGC.
I don't know ONGC. I remember it was your top 10 stock pick of the day.
Yes, and Titan is the other one, Surabhi. This stock just continues to amaze me because, again, 3% higher on that stock, fresh all-time high. Just phenomenal the way some of these stocks have been moving. Mitesh Thakkar and Prakash Kaba are joining us. Mitesh, morning again. So, been a good first hour for individual stocks. Your thoughts and your stock calls now?
So, Anuj, good hour as you are highlighting. I think the markets, possibly are just on that verge of getting past the 17,430, 440 zone. Now, I'm actually waiting for that since yesterday. Once that happens, I think the Nifty should enjoy possibly more momentum and we could see a faster move on the upside. Having said that, the calls that I have, a buy on IGL with a stop at 579 for targets of 611, and NTPC is a buy with a stop at 115.5 for targets of 122.
Okay, Prakash, good morning. What are your trade?
Good morning, Anuj. 17,350 seems 370, I would say, is a very crucial support. As long as it's about this, dips are viable until tomorrow. I have two stocks here. The first is HDFC Life. Yes, certainly looking good to me. There's a good momentum here. And possibly we'll see HDFC climb to maybe around 760 zones and past that as well in the days to come. Stop below 740 should be fine. Second stock that I like is from the financial package, I think Manappuram Finance has seen a good up move the last couple of days. Possibly we could see an up here to maybe around 170. Stop below 166 should be okay on Manappuram Finance.